Ahoy there, trader, and welcome back. This is the Anti-Investor Trading Podcast. So let's talk about the 12 keys to long-term success. And over the next several episodes, including this one, I shall firstly shallow dive and then deep dive on the 12 keys to long-term success in trading. We're going to explore several ideas and concepts and habits that have helped me have a now nearly 30-year trading career in the markets, and they can help you along your road to success. So, welcome to the Anti-Investor Trading Podcast, where we talk about swing trading stocks, stock options, index futures, and more recently we're diving into some day trading concepts, which is where I had my roots in trading. My goal ultimately is to give you the right tools, the correct rules, software to assist you, a community to support you, and if you will allow me to be a mentor to show you the way so that you get real results in the fastest and smartest possible way. So first up is continuous learning. The markets are always changing, even put my teeth in, and successful traders never stop learning. They stay updated on global events, understanding emerging trends, markets, and some of this will depend on your time horizons. Again, my focus is very short term, so just having an awareness of when certain events are is just enough. You don't need to read the economic reports. And obviously, if you're more of an investor, you may need to have more of a dive on those economic events because they may have an impact long term. Ultimately, traders are always looking for opportunities to refine their strategies, and that's a thing that I've recently gone through in the last 6 months myself. Again, I've kind of gone back to my roots quite significantly and diving into short-term trading, more of an income strategy in fairness, specifically utilizing zero-day options. And this was just something that wasn't available 5 years ago. So, just keeping abreast of the new products that are available, to have, an eye out for those opportunities. Discipline and patience. This is, to be fair, many traders fail because of this, and this one that I nearly failed at because of lack of discipline, lack of patience. New traders, we always want it now, we want it now, and a lack of discipline means that we can just take whatever looks interesting rather than follow an actual process. So don't let your emotions dictate your actions. I was very conscious that this was something that I was going to struggle with, and keeping a journal, which we'll look at later on, was a huge factor in allowing me to keep patience and keep discipline and identify those areas where I wasn't. So successful traders do develop a strategy also. They stick to it. And again, putting systems in place to help you stick to a strategy is paramount. So even when the temptation to stray is strong, you need to keep discipline. The majority of my worst trading decisions have all been because I decided to ski off-piste, for want of a better description. And it's a very expensive lesson just to come back to that discipline, and eventually it just becomes second nature and you don't think about it. The number of times that you're tempted to go off piste gets lesser and lesser to the point where it's once every blue moon. And I'm not going to say that they go away completely, but once every blue moon you're going to be tempted to do a discretionary trade, should we call it, and be kicked in the shins for that trading decision. So waiting for the right opportunities is a part of that discipline and patience, and not forcing the trade when the conditions aren't necessarily ideal. Now, linked to this is risk management. No trader can predict market movements with absolute certainty. It doesn't matter how good a trading strategy that you have is. You can't predict the future. No one can. So successful traders will always have a risk management strategy in place, setting stop loss orders where relevant. Again, for me personally, I like to trade with stock options, as I mentioned a moment ago, and the risk is defined on the entry by the price of the option or the spread that you're trading against. So everything is defined risk for me on the entry, and I physically can't lose more than that amount. And it may seem that having a small risk or small percentage risk of capital is a slow path to success. It's actually the fastest path to success if you don't have patience, if you don't have discipline. You're not betting the farm on every trade. You're trading small on every trade and building up from there. which leads us on to the next part: start small and scale up. Especially in the beginning, you're going to be wrong more than you're right in the beginning, just like when you learn anything new, whether it's a sport, whether it's learning how to drive, whether it's a musical instrument. You're going to play the wrong notes more than you're going to play the right notes, to use the musical metaphor, when you start. So it's similar in training. You're going to press the wrong button. There's a technology curve, there's a learning curve, there's an education curve. You may not have a fully fledged strategy if you're developing your own. If you're learning someone else's, then it's going to take time just to get used to the rules, the decision making process. And again, one thing that I like to help with that is having a mechanical rule. Again, I've spent the first probably 2/3 of my training career discretionary training, and the last third pretty much rule defined training. I don't want to make discretionary decisions, so everything is essentially an algorithm, and that if this then that decision making process is going to help with the ability to scale and keep disciplined and apply the risk management, because you're not worried about the am I doing the right thing, the uncertainty behind discretionary decisions. So if you've got a rule-based decision that's proven, robust, you can back test it, sideways test it, forward test it, you've got all the data that you can shake a stick at, then it should give you the confidence to place the trade without worrying about if you're doing the right thing and managing the emotional side of a trader. Anyway, increase your position size slowly, gain your experience, gain your confidence, and that's going to help you understand the market dynamics and the strategy dynamics without, again, betting the farm on every trade opportunity. Stay updated. Again, a lot of successful traders do keep informed about certain events. Again, for me personally, because of my short-term focus, I'm just looking at when such events are, so I can step aside from them. Non-farm payrolls, for example, first Friday of every month. It's on the calendar. Most economic calendars, good and bad, have a nice list of what events are out relative to the country and the markets that you're trading. And basically just keep an eye on things that might influence the markets. Again, what I have learned is that if you've got a strategy that is well tested and back tested historically, it's not taking the economic events into consideration, so that you should have confidence to trade through if you forget an event. And that's one of the reasons why, again, one of the huge benefits of back testing historically. If you've still got a great equity curve despite huge negatively impacting events on your strategy, then you've got a winner. So having a viewpoint on fundamentals and technicals to help guide your decisions. Again, for me, it's just a case of, you know what, I've got an event out, I've got the Fed announcement is during market hours, maybe I just don't trade today and don't get involved in the possible yo-yoing price movements. Again, this is what I refer to as managing the trader. Again, as we've just said, the strategy can probably handle it, because again, you've back tested historically, everything looks great. But again, managing the trader 2 or 3 times a month and just keeping those emotions in check is a huge, I'm going to say huge again, or maybe one more time, huge, to help you have long-term success. Again, that for me is more important than being right, and you can take satisfaction in the strategy would have been just fine if trading through it, but managing those emotions is again huge to say the least. Next up is use technology. Again, there's so many advancements that we have in the market, in the world, compared to when I first started out. I started out hand-drawn charts, just to give you a benchmark. So having technology now where we've got tools, algorithms and platforms that have just evolved light years ahead of where they were back in the early 90s. And the best traders use these to gain an edge. As you've heard me mention, I'm talking about back testing historically. Again, I'm not a programmer. I hire someone to code stuff with TradeStation, but there's a lot of no coding platforms out there like TrendSpider. You can basically plug your idea, if this then that, and historically backtest it over 1,000 trades. Very easily get an idea of, okay, what would your trading idea, or what would this strategy of perform like if I followed the process as per the rules. So just another benefit of having rule-based trading decisions, even if you're trading them manually, which is what I like to do, rather than auto trading. then you can see historically this was a good strategy. You know, I should be trading this. There's no reason for me not to, because you've got a edge in the market. Again, have a look at again charting tools. You know, real-time news feeds is, you know, is taken for granted these days. Again, I don't need them these days, but if it's something that you need for your trading, you know, find a good news feed, find a good charting tool, and I would certainly suggest to everyone to look at a more algorithmic style of trading, which is essentially what I do. Again, if this then that, then place the trade, then if this then that, then manage the trade. You know, and that's how I like to make my decisions. Maintain a good mental mindset or equilibrium. Trading can be stressful, and you've got this real-time roller coaster ride of emotional highs, emotional lows. So those that do well in this field often have methods and techniques to manage stress. Me personally, I like to meditate. I exercise regularly, take regular breaks from trading. But again, you need to have some balance in your mindset, and I can't understate how important this is. As I mentioned earlier, it's huge, and a lot of the advice and suggestions is said with throwaway comments. Again, this is the shortest explanation of everything that I'm going through today. You know, have a good mindset. You know, there's so many ways of doing this, and ultimately you have to look at what is right for your way of life. Again, some people don't like meditation, that's fine. Some people don't like exercise, but you do need to find something to maintain the mental peace or the mental mindsets that you need to have long-term success. Nextly even, is that a word? It is now. Anyway, diversify. It is important to have diversifying strategies or assets to reduce risk. I've never been a fan of, you've got to have so much in stocks and so much in bonds, and you've got to be an investor like Warren Buffett, blah, blah, blah. I've never been a fan of that, but I do believe in diversity. The way that I approach diversity is to have multiple strategies. It sounds like it might be complex, but it's not. Again, as I've already mentioned, everything is rule-based. So like a pilot would have a pre-flight checklist, you can have a pre-trade checklist for your strategies, again, from swing trading, which is what I like to do. Futures trading, I've got a strategy, and I've got now, which is, you know, it's becoming a core strategy now, which is the 0-day options for essentially daily income strategies. So just those three types of trading, they've got different time horizons, so it's not time intensive with that, but I have diversity. I've got a few different strategies that have a few different time horizons that allow me to get paid and gives me some diversification in markets and different asset classes. Next, you need to have some self-review and accountability. Keep a diary, as I mentioned earlier, both a physical diary of your trades and what you're doing. There's lots of software that will plug into your trading account that will spit out performance and help you find what trades are going well, what are not, and you can find for yourself which are ultimately the better trades, the better days of the week, the better times of the day if you're more short-term focused. But I'd also keep an emotional journal. It sounds a little bit tree-hugging, bead-shaking, woo-woo, rah-rah, but believe you me, did I mention it was huge? The mindset is huge. What I was able to identify was just by keeping an emotional journal. For example, I'd place a trade, write the trade details down, and I'd put whether it was excited, and eventually it was one word thing. I'd put whether it was excited, whether it was nervous, whether it was confident about a particular trade. And what I was able to identify is the trades that I was almost arrogant about, overconfidence, looking back with hindsight, really confident about this particular trade, they were the worst performers. And what I was able to identify was that emotional reaction to overconfidence in a trading decision. I was able to go, whoa, here's that overconfidence again, take a step back, because I was missing steps in my haste to place a trade, and that was coming out as overconfidence. So I was able to put the brakes on and say, you know what, let's go back to the beginning, let's slow things down. If I missed a trade, so be it. But to go through the pre-trade checklist again and just recognize, oh, I've missed a step, actually there's no trade here, or maybe I would approach the trade in a different way, or I've clicked the wrong button. You know, you're able to make put little speed bumps in your way when you can identify that emotional reaction. And funnily enough, the ones that I was most nervous over were the better performers. And you would think it would be the other way around, and just this emotional reaction of being super nervous and anxious about a trade, they were the best ones. So I knew that when the trade was on, to really step back, leave it alone, and let the expectations play out. And it's only possible because of this self-review and accountability and basically keeping a diary. Now, networking is next on my little list of things to do as traders. It doesn't sound like an obvious thing, but engaging with other traders, joining communities, even attending seminars. Again, you can kind of check the box on the educational side as well. Take a few of the other boxes that I mentioned earlier, but it can help provide new perspectives and insights, having a peer group of traders that you might not have come across if you're a solo trader. Again, while I am an educator and I'm kind of the captain of the ship, for want of a better description, in my community, I don't think that I'm better, because we all bring something to the table. I'm always using this gentleman in our group as an example. He's basically an expert in Elliott wave analysis, and while he didn't have a robust strategy that allowed him consistent profits, he obviously does now, but he did bring that to the table. That's something that I don't have. I've got an awareness of it, that style of trading, that methodology, but he had spent many years exploring Elliott wave analysis. So I'm not going to discount his viewpoints when it comes to that, because in our peer group or digital room, he's the expert on Elliott wave as far as I'm concerned. So I'm not going to pretend that I'm any better than anyone else. I've just been doing it a lot longer than many other people. Again, this ties into like staying humble next on the list. Again, I'm being respectful that other people have experiences that I don't have, and I'm not naive enough or overconfident enough to say that I'm better than that next person, because while they've been a struggling trader, I managed to kind of figure it out quite early on. I'm very fortunate in that regard, but just having that, humble attitude just allows you to be respectful that other traders have got other experiences that you can benefit from, regardless of where we all are on our journey. Yes, I've been doing it longer. I've been successful for a lot longer, many years in fact, but it doesn't mean that I can't learn from other people and you can't learn from other people, regardless of where they are along their journey. So the best traders respect the markets, respect their peers and other traders, and you're going to have like winning and losing streaks. So having a community of people around you will help you get through the good times and the bad times, for that matter. Lastly, this is something that I had to learn many times the hard way, but knowing when to step back if things aren't going well, or if your strategy is underperforming, that's going to impact your mental space. So knowing when to step back and take a break, and having that diary is going to help with this as well, so that you're not trading out of desperation to chase the losses or win it back, or the next one's surely got to be the one. All those things and negative self-talk that we have, it leads to poor decisions, and hoping and praying isn't a trading strategy. So don't fall into that trap, and take a step back, take a break. Again, I do it daily by reading, meditating, exercising, and then long term I like to take multi-day breaks quite regularly, every month or every other month, just so that I've got that batteries recharged experience. Right folks, so that's me done. That's my 12 steps, and in essence there's no guaranteed successful formula for trading. Again, this is probably the number 13, if you want to call it that. There's no specific right path, and again, this is what makes it probably quite difficult for a lot of traders to find their path, their strategy. It's a combination of education, strategy, discipline, psychological strength, and that's what sets successful traders apart. For me, when I made the choice to go into trading, I'd had the education. I started very, very early on, in my mid-teens in fact, but I'd been learning about it for quite a while, a number of years before I was old enough to place a trade, for want of a better description. I had to learn discipline along the way, and I was aware of psychological strength. The strength and psychology side of it came with time. I was very aware of that, and keeping a journal, keeping a diary helped with that and speed that up, for example. Anyway, what I'm trying to get to is back into your strategy and your system and your process, rather than plug into any proven strategy, because there's plenty of great traders out there with great systems. And one of the things that I've always said is just because they've got a good system doesn't mean that you can make it a good system. And the reality is if that guru or trader is teaching discretionary trade choices, it's not something that can be easily replicatable by just anyone. Again, another reason, because I take my role as an educator very seriously, is again, I want it for me first, in that I want rule-based trading decisions, so that I've got this algorithm: if this then that, make this trade, make this choice, trade this, make this decision. But because of that, it means that it's replicatable by quite literally anyone, whether you've got the education, the strategy, or the discipline. You just need to kind of plug into that process, again, just because of the way that I put my systems and strategies together. Again, I want them for me first, but it is a benefit, or a side benefit of that, is you get to benefit if you think that, you know, what I do is right for you. Anyway, if you like what you've heard today, be sure to follow and listen to the very first episode. I map out the first of my 6 most profitable money-making strategies. It's regarding swing trading in the first episode. I'm going to do a short series on my other strategies shortly. But that's all for today. Thank you for giving me your time and your attention and making me a part of your regular routine. For now, have a wonderful day, and I'll speak to you at the same time next time. Toodaloo for now. Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Anti-Investor provides educational information and does not provide financial advice.